Well, hello, I'm Mary Ann Nay, and we're here for the senior circuit breaker, which is a tax credit for seniors, and learn if you're eligible or not. We have Senator Bruce Tarr with us right now, so maybe I can bring it over to him and he'll introduce Brian Lynch, who is the fellow from the Department of Revenue who will explain the whole program. So, thank you.
All right. Well, good morning. I'm happy to be here at the Rose Baker Senior Center, which is always an active place for seniors in Gloucester and on Cape Ann. And there are always so many things happening here, but today is one that's very important with regard to taxes. Now, there are a couple of ways that you know it's spring in New England. Number one, we start to get spring showers. Number two, we start to see a little bit of grass pop up. And number three, Brian Lynch comes to our senior centers to help us understand how to take advantage of the tax programs that we legislate on Beacon Hill to be able to help our seniors be able to afford the cost of their household budgets and, most importantly, remain in our communities, because our seniors are an important resource and a cherished resource for all of us. So this is somewhat of an annual event, but a little bit different today. Different because on Beacon Hill, in the last legislative session, we made major changes to the tax policies of the Commonwealth of Massachusetts. And one of them, and one of the most important, was to double the value of the senior circuit breaker tax credit. You're going to hear a little bit about that today. And we want to make sure that folks take advantage of that, because too often folks don't think about being eligible for the tax credit. And one of the reasons they don't think about it is because they may have no tax liability. But here's the good news. The way the senior circuit breaker tax credit works is that even if you pay no taxes, you are entitled to what is called a refundable tax credit. So if you fill out a tax form and you send it in and you're eligible, you'll actually get a check back from the state. So that's an important thing, and we want to make sure that people take advantage of it. The second thing that we wanted to talk about today, and this is something we're going to add to the presentation, is the increase in the value of the volunteer tax work-off program. So in Massachusetts, the state allows municipalities to create a program where seniors can volunteer their time for the municipality and get a credit against their property taxes, which we all know are an incredible burden for a lot of households. Well, up until this most recent package passed, the limit for that was $1,500. That's how much you could, the maximum that a city could allow you to get. I amended the bill and moved that to $2,000. So we've increased it, but I have to caution that this is up to the municipality to be able to take advantage of that. And what we did was lift the cap, but not the floor. So, without further ado, because I'm getting to the edge of how much I should be talking about, I am very pleased that Brian Lynch is with us once again. Brian represents the very best of the DOR. He is always available to answer questions. He's always available to come and have meetings and discussions like this one. And every time we ask, he makes himself available. And I would point out that he's doing this all over the region. So today is one of these seminars here, but he's doing it all over our part of the Commonwealth of Massachusetts. He spends a lot of time at it. And I'm pleased to introduce him. Brian, I don't know if I'm going to have to give you this microphone, but good to see you, and we always appreciate your coming out for us.
Of course.
So I guess I'm going to make this transition right there. I'm going to officially hand off and say thanks to you for always being there when we ask.
Thanks for having me.
Appreciate it. And thanks to you at 1623 Studios. Thanks to all of you for being here to take advantage of this, because what we do doesn't make a difference unless you take advantage of it. And thanks to the Rose Baker Senior Center for hosting us, and thanks for Mary Ann Nay for putting it all together. That's my phone ringing, telling me I'm late for the next place I'm supposed to be. So I'm going to leave and turn it over to you, Brian.
Thank you very much. Good morning, I'm Brian Lynch. I'm with the State Tax Agency. And as the Senator told us, we're going to talk about a little bit of relief, hopefully for seniors. So the general idea behind this tax credit through the Commonwealth of Mass is that, generally speaking, seniors are on a fixed income, but we all realize that our real estate tax seems to go up every year, and our water bill increases as well. So this is in place to try to help people out. It's been in place for 20 years. We're going to talk about the current year of '23, and you can see on my handout, I have the prior 3 years as well. So once we kind of exhaust '23, the current thing, we'll talk about the prior years if you think you might be able to benefit and you kind of missed out and weren't aware of it in the past few years, right? The best thing I could probably tell you this morning is you're very fortunate to have free tax assistance here in the COA, provided through AARP volunteers. They're awesome, great, very knowledgeable people, trained by the IRS, trained by the state. They use laptop and equipment provided by the IRS. They work together. So if Mary Ann does your tax return, I check her work, or vice versa. If I do your return, Mary Ann's going to check the work before we send it off to the IRS or to the Commonwealth of Mass. And you're going to review the return that we put together for you. If you're not happy with it, if you think you could do better someplace else, you're not obligated to, we don't have to hit the send button unless you want to. Okay. I will say that if you go to a tax professional, if you've gone to a tax professional in recent years, they should be very familiar with this. It's no mystery or surprise to someone that does taxes for a living, right? So let's talk about it's very straightforward, really. It's really not a complicated thing. Sometimes when you talk about taxes, people just kind of like glaze over and they're like, okay, I'll talk to you later. But this is really worth paying attention to. So the general idea with this is that when your real estate tax, together with half your water bill, and by adding half of your water bill to your real estate tax, we're trying to boost the credit. We're trying to give you a little bit more money there, right? So once your real estate tax and half your water bill becomes greater than 10% of your total income, this credit is in place. So it's been determined that that's when real estate taxes generally kind of become a burden, when it's greater than 10% of your total income, okay? So I would just like everyone to kind of bundle up, it doesn't have to be just kind of a ballpark type of thing. If you include maybe your Social Security, if you have a pension, a bank interest, or you took a distribution from an IRA, that type of thing. So all those statements that rolled in right after the first of the year. So if you kind of just put all that income together, and I want you to take 10% of that amount. That's half the equation right there. The other half of the equation is what you paid in real estate tax, what you actually paid, and you're able to add half of your water bill to your real estate tax. When we do that, if your real estate tax and half your water bill is greater than 10% of your income, the credit is in place, it's working for you, it's going to kick in, and whatever amount that is, whatever amount your real estate tax and half your water bill is greater than 10% of your income, that's going to be the amount of your circuit breaker credit. And the maximum, like the senator said, it more than doubled for '23. It went up to $2,590. So if you look on my handout, in the top right there, the max. So unfortunately, not everyone's going to get the max. I wish it were the case, but everyone has different income, and everybody pays different real estate tax. So the calculation, everyone's amount's going to be different. I like to think of that 10% amount calculation. That's like a break-even point. So if your real estate tax and half your water bill isn't quite up to 10% of your income, unfortunately, the credit is not going to help you out this year. It might help going forward because maybe your income's going to stay the same, but your real estate tax and water bill continues to go up every year, right? So maybe in future years you might be able to benefit by it. But if we think of 10% of your total income, and if your real estate tax and half your water bill is greater than 10%, again, it's working for you. And whatever amount over that 10% break-even point, that's going to be your credit. So really, that's pretty straightforward, right? We do need to think about some eligibility criteria. So on the handout on the right-hand side under 2023, if you're single, your total income cannot exceed $69,000. If you're married filing together with your spouse, that total income is $103,000. And one spouse, as long as one spouse is 65 by December 31st of the tax year, then you're okay, you're in the running. Both people don't have to be over 65. Some people file as head of household because they have a dependent person living with them. Maybe a grandchild, some other relative. that basically they're providing their financial support, and those folks file as head of household, and that income amount is $86,000 or less for 2023. Also on the handout, if you look under 2022, just to the left, you can see that the maximum credit last year was $1,200. So again, a big increase for 23. Again, not everyone's going to qualify for the maximum, but that's, you know, it's nice that they were able to make that increase. In the legislature, they allocate the funds for this out of the state budget. The other thing we need to think about is the assessed value of your principal residence in Massachusetts. So maybe halfway down on the column, the assessed value of your home cannot exceed $1,025,000. I know it sounds like a lot, but where the real estate real estate values have been increasing, right? In some communities that we go to, some people even say, oh, I'm out of the running because my house is worth more than $1 million. I can't apply. So, you know, some people have been in their home for 40, 50 years, right? And it's not really their fault that the value has increased. I mean, good for them, but you know, I'm sure there's a real estate tax related to that too. It's relevant, right? So really, that's kind of what the crux of it. And I should mention that renters can qualify as well. So we always think of the homeowner, because that's pretty much predominantly who it is. But renters are eligible as well, provided that they don't live in any type of subsidized rental arrangement. Like if there's subsidy through the federal government, or the Commonwealth of Mass, or maybe like a charitable organization, like maybe religious or something like that, they're automatically disqualified for this. The reasoning there is that they feel that there's already a benefit. They're already getting reduced rent, so this would kind of almost be like a double dip on that, right? So, what questions might you have? Yes?
Somebody who lived in an apartment for 8 months of the year
Yes.
and then moved into a condo that they bought
Right.
would now have to figure out 2/3 of
Excellent question.
that and then
Yes.
1/3 the other way and come
Excellent. Yeah.
And then
It's just kind of an extra step.
Yes.
So, you know, tax people, we have a form for everything, right? At least one. And like on the handout, it mentions Schedule CB. So Schedule CB for circuit breaker. If you do a paper return, there's a Schedule CB in the book. If you use TaxWise or H&R Block, whatever program you might use, it's built into that. If you come here to the COA and you have the volunteers do your return, they're very familiar with it. They can put it together in 2 minutes for you. So someone in that situation where I rented for 8 months and then I bought a condo, so they're going to have 2 Schedule CBs. One working with the rental portion, right? So it's like prorated. And then the other portion they're going to work through for the real estate tax that they pay at the condo. And they're able to include half of the water bill too. So they might need to get in touch with maybe whoever's paying the bills for the condo association to make, I don't know if they have their own water or if it's part of like a group thing, but they're welcome to utilize that too. Does that help?
Yes.
Okay, good. So then we're going to combine the 2 bottom lines and feed that. So the schedule is going to feed into the regular tax return that we've been filing for many years. Interesting fact, last year, 93% of the income tax returns that we got at the Department of Revenue for Commonwealth of Mass were filed by computer. So it's only 7% of the population that is still using paper. And last year we processed 4 million income tax returns in Massachusetts. You have questions?
Sorry, I didn't mean to keep my hand up.
No, fine.
Would my tax preparer automatically do that, or would I have to ask?
Okay, good question. So if you go to a tax professional, they should be very familiar with this. It's no big surprise to them. Again, this credit has been in place for 20 years.
I never heard of it.
Yeah. I mean, that's kind of why we're here, is trying to like get the message out, you know? If at home, if in your junk drawer, if you have a copy of 22 return, or even prior years, 21 or 20, you can take a look at last year's return, and if you go to line 44, there's a line for circuit breaker tax credit. And if your preparer, if you got the credit last year, that's where the amount's gonna show up.
Line 44.
Line 44 on your last year return. And it's the same on this year return too. So, I mean, it just kind of takes the mystery out of it. If you go home and you look at last year and you have an amount there, you got it. And also, I know your tax preparer kind of gives you a little package of information as you head out the door. And if you flip through copies of the return, there will be a schedule of the CB in all the paperwork that he gave you, your return. And the schedule CB is like where the calculation was done, and that's where the amount was determined, however much credit you might have. Yes?
I would think that if you got some money back, that would let you know that you got it.
Yeah, but you know, everyone has, right. Everyone has a different story, right?
Okay.
So some people normally get a refund when they file a return, and maybe if they're going to qualify for circuit breaker, the refund's going to be enhanced or increased a little bit, right? But it does make me think of a situation where you had mentioned earlier. There are some folks, when we go to Council on Aging, and we say to them, they're playing bingo or whatever they're doing, we say, hey, we're going to talk about tax credit, it might help you out, why don't you come in and listen to us, you know? And they say, oh, no, that doesn't apply to me. I don't file a state tax return based on my income, I don't need to, I haven't done that in years. And I say to them, don't cut yourself short, because you don't need to have a tax liability with Massachusetts in order to get the credit. And that's what the senator was referring to. He said it's a refundable credit. So let's use an example like Social Security. Massachusetts never taxes Social Security. We also do not tax contributory pensions, like from police officers, firefighters, school teachers. All of us public folks are paying into this retirement system for many years, and then when we retire and get the benefit, it's taxed federally, but our retirement's not taxed by the state. So there are some people that say, my wife's getting Social Security, I'm getting a mass pension, it's not taxable by the Commonwealth, we don't have a need to file a state return. But that doesn't mean that if the numbers work for you for circuit breaker, that you can't get that amount refunded. But you have to file the return in order to get the check. So we'll either send you a check or we'll put the money in your bank account, like direct deposit, if that's how you want to do it. Okay. Again, I think the best thing today I could tell you is that there is the volunteer service. And I'm surprised, I asked, do they still have appointments available? And yes, they do. Because at this time of year, most places we go, yeah, we do have the volunteer service, but we're booked. We don't have any more appointments. And so I try to tell people, I advise them, well, right after the first of the year, when those statements start showing up in the mail, get on the phone with the Council on Aging and make your appointment. Because anything that's free fills up fast, right? And there's never enough volunteers. Whenever we talk about and AARP tax people, they're looking for volunteers to do returns. So with that combination, sometimes it's kind of tight. Yeah. And very knowledgeable people, if you feel very comfortable with them, usually they have kind of a background like in banking or in insurance, some financial thing. But really the most common thing I've found with them is that they just enjoy helping people. That's their thing. So that would be great. Yes?
All right, I have two-parted. On the first part, because I was going before when I owned my things outright to H&R Block, but I don't ever remember bringing real estate taxes or water bills or anything in.
Okay.
So how would they wouldn't have done it, right?
I would say probably not.
Right.
If you didn't.
Yeah.
Real estate tax comes up in the conversation when we do our return if you have a mortgage. That's usually because on the federal side, you itemize. And you would take your mortgage interest and your real estate tax, right? Those are the two big ones. But usually like when people get to be 65 or older, maybe their house is paid off. So they no longer have a mortgage, they're still paying real estate tax. The other thing is that the IRS has increased the standard deduction. So for a lot of people, I used to itemize, but now that the IRS has increased the standard deduction, I'll take that. That's better for me than itemizing to take real estate tax. And because my house is paid, I no longer have a mortgage, thank God. So, but any good tax preparer should ask you, what did you pay in real estate tax, and what was your water bill?
Right.
What they usually do is they send you a paper and you check everything you have.
Yeah, like a survey before you.
Yeah.
So now the second part is,
Yes.
now I currently live with my son and daughter, my son-in-law and daughter.
Yes.
I paid for half the house. I put half of it
Mhm.
for them that way.
Mhm.
But I don't see the water bills or the real estate taxes. I believe they come in my son-in-law's name.
Okay, we'll talk about that after, okay?
Okay.
Yes,
Yes, if your house is in a trust,
yes,
okay, but you're living there,
yes.
and
You're
you're
still,
responsible for the water bill.
you're still eligible,
You're
okay,
still
yeah.
eligible.
So even though your property's been put in a trust, doesn't rule you out, okay? You're still in the running, right? The only thing with trusts is, trusts are usually, there's usually a grantor trust or a non-grantor. And with the grantor trust, if you're a trustee, then you would fill out the paperwork as a homeowner. If you have a grantor trust, but you're not a trustee, you would do the calculation as a renter. If your trust is non-grantor, then you would fill out the calculation of paperwork as a renter. So it's not that complicated. You just need to kind of like figure out, how long have you had a trust? While?
It's been going on.
Okay, so you just need to determine if it's grantor or non-grantor. And if it's grantor, are you a trustee or you're not a trustee? You're not a trustee. Okay, so it's fine, but you have the expenses, right?
Yeah.
You're paying the real estate tax and you're paying, so
Everything.
you're still eligible and you're just gonna fill out the paperwork and approach it as a renter. So I don't know if I really talked in detail about the renter. I know I talked about the homeowner, right? So renters qualify too, as long as they're not living in any type of subsidized arrangement. The income measure for renters is the same, 10% of their income. It's still gonna work with that. We're gonna look at 25% of the rent that they paid. The circuit breaker credit is gonna help someone out if 25% of their rent is greater than 10% of their income. So someone greater than me determined that, generally speaking, when you pay rent, 25% of it kind of goes to pay real estate tax, right? You have a landlord, like they have real estate expenses. So it's really kind of to make an accommodation to help people that are renting, that they wouldn't be ruled out just because they don't own the place, right? Other questions? Yes?
If I already had my taxes filed, is it too late for this year?
No, and I'm glad you mentioned that because when you talked about previous years, right? If you go home and you look at prior years, you can page through what H&R Block did for you.
Right.
And you want to look for Schedule CB in the package. And you also want to look at line 44 on the state return. If you have an amount, you got it.
Okay.
If, from what you heard today, if you kind of think, I should have got it, but I don't see it on my return, I would get in touch with H&R Block and say, this might have been overlooked. Like,
Right.
I think that, from what I heard, I think I'm eligible for this, but I didn't get it. So let's sit down again, and we can make a correction, or we can amend the return from prior year. So, and you, just like I have the prior 3 years on the handout, in addition to 23, the state will allow you, I mentioned that this has been around for 20 years. The Commonwealth is generous, but to a point, okay? So you need to address this within 3 years. The IRS operates the same way too. Like if you feel like you missed out on a refund or a credit, they're gonna give you time to come back and say, I wasn't aware of it, I overlooked it, here's my paperwork now, I'm back again. But you have to do it within 3 years from the due date of the return. So if you think that might be the case for 2020, heads up, because you have a month to take care of it. So if you don't address 2020 by April 15th, a month from now, you're gonna miss out. So when I come back here next year, on next year, Mary Ann, I'm gonna have 2024 on my handout, but 2020 has dropped off because it's too late, right?
That's right.
So something we can work on together.
Yes. So we'll be back.
We will, God willing. What other questions might we have? Okay, I'll be here after the little presentation. Sometimes, I don't expect people to say, this is my income, this is what I pay in real estate tax in a public situation like that. That's not cool, right? So I'm happy to talk to you one-on-one. Sometimes people say like, did I hear you right? Yeah, like, this is why, I think I'm happy to do that. Do you folks have septic up here, or you have town sewer?
Oh, yeah, septic.
Both.
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 Some people have sewer, some people, okay.
Right.
Because the other thing I want to make people aware of, because it's another thing that it's through the Commonwealth of Mass, but a lot of people are not aware of it. If you're thinking about selling your home, and part of the transaction or the inspection is going to be your septic system, and commonly known as Title V. So let's say that you can even do this ahead of time if you're kind of thinking, I think maybe in the fall I'm going to be ready to sell. You could get your septic system inspected. If your septic system's old and if it's going to fail inspection, right, and you're mandated to either replace it or a significant upgrade to the septic system. And anytime we talk about septic, it's cha-ching, it's a lot of money, right, big dollars. So the Commonwealth is aware of that, and there's a provision to try to help people out in that situation. It's nice that part of this tax relief package that the Senator spoke about that was passed in the fall, the septic credit that we have was also increased. So just like the circuit breaker credit was increased, the septic credit was increased as well. And what we're going to do is we're going to look at the first $30,000 of cost that you had to replace or significantly improve your system. It also applies, sometimes people are mandated by the town or the city. They say the sewer line is coming down the street and you're required to tie in, and it's going to cost you some money, right? So if that's the case, this applies to you as well, right? So we're going to look at the first $30,000 that you spent on that type of work, and we're going to take 60% of your cost. If it cost you $40,000, sorry, the cap is $30,000. If you spend $25,000, well, we're going to work with $25,000 because you didn't spend $30,000, so we're not going to work with that figure, right? But whatever your expense was up to $30,000, we're going to take 60% of your cost. So if it cost me $25,000 to do it, I'm going to take 60% of $25,000. But because I know the numbers already, I'm going to work with $30,000. Okay, so we've got $30,000 in expense. I'm going to take 60% of $30,000, which gives me $18,000. You now have a tax credit with the Commonwealth of Mass of $18,000. You wouldn't take it all in the year that it was done. It's going to be spread out over 5 years.
Oh.
Okay. Yeah, all the credits that the state have, they're all different, just to confuse the issue. You know, the numbers are always different, the qualifying income and how much and whatever. It's like they're all, there's 20 different credits. Like lead paint is another one that sometimes people are able to take advantage of that because lead paint abatement is expensive too. So when we calculate our septic credit, we have 5 years to use it, right? The thing about the septic credit is you have to apply it to a state tax liability. So it's different than circuit breaker because we said some people that don't have a state tax liability because their income is Social Security, which isn't taxed, or a public pension, which we don't tax. But in order, if you get the septic credit, it has to be applied to a state tax liability. And again, you're going to apply so much for 5 years until you exhaust it, right? Some people can maybe use it up in 3 or 4 years, but they have 5 to use it up. If you can't use it all in 5 years, I'm sorry, but you're going to lose the balance, right? So I just want to bring that to people's attention because I know it's an issue and it's big bucks, so yes.
That's not by age, that's for anyone.
Good question. There's no age requirement with septic credit. I could be 30 years old and sell my house, but before I sell it, I have to replace the septic system. It's going to cost me a lot of money. You're right, there's no age requirement. I'm glad you mentioned that.
And most of the others, there's no age requirement?
Usually, most of the other ones, right, they're not age requirement. The other thing for septic is there's no income measure. Like when I talked about, in order to be eligible for circuit breaker, you got to meet the income requirement, be below a certain amount. With septic credit, you can be a millionaire, you still don't get it. Speaking of millionaires, this guy here.
Oh, I'm definitely not a millionaire.
Well, it's interesting, if for 2023, this is the first year that there's a surtax in the Commonwealth of Mass for people. It was voted in by the population. It wasn't something that was done by the legislature. But when we voted, I don't know, a year or two ago, one of the questions was, if there are residents in the Commonwealth of Mass and their income is more than $1 million in a year, do you think that those folks, not only would they pay the 5% like we do, but any amount over $1 million, that they should be paying an additional 4%? And everyone checked off, yes, I think they should. Of course, yeah. So that went through because it was a ballot measure. That was right. It happened. There are 30,000 people in the Commonwealth that are affected by that.
Wow, that's a lot.
It's a lot. So if you want to call us next week, we're happy to talk to you. We'll give you the 800 number. Also on the website, there's some really good information. It's very accessible, and just go to the DOR website. In the search field, you just type in SEPTA credit if you want more information on that, or you can type in senior circuit breaker tax credit, and we'll give you some information on that. Usually, like in those guides that are online, it's like a 4-page document, so it's probably more than you really want to know. I just try to get to the point, so people get the message. But there is a lot more detail if you're interested. Yes?
You didn't mention Mass Connect.
Oh, okay, good. I'm glad. Okay, thank you. So also an option or an application that we have on the DOR website, we call it Mass Tax Connect, and you're able to file your income tax with the Commonwealth of Mass for free directly with us through our website on Mass Tax Connect. Also on Mass Tax Connect, you could make payments if you have to. Like sometimes people make estimated tax payments because they don't have withholding based on their income source or whatever. You can go on to Mass Tax Connect, make a payment, which is debit your bank account. It also gives you like a little bit of history, a little bit, so we're always trying to empower the taxpayer to kind of alleviate, like you don't have to call us because you have access through the website to a lot of information that you can access. We try to take the mystery out of it. We're happy to talk to you. We give you the 800 number. But at home, if you'd rather just go on the website and try to, you would set up an account, which really is pretty straightforward. You need a username and a password, no big deal. But then when you make estimated tax payments, or you want to file an extension, or you have some other question, sometimes we write people a letter and say, could you send us a copy of your real estate tax bill to kind of justify the expense that you have? You're able to upload it through Mass Tax Connect on the website. Some of these letters, the dreaded letters that you might get from the IRS, it's always like, oh, never to see that, oh God, right? It's never good. But it's an anti-fraud tool that we use to ask people for documentation. Because unfortunately, in this tax refund business, there are people that are trying to grab a refund, especially early in the season, like with identity theft. They get a hold of someone's social security number, they want to file a return for them, they want to grab the refund. So we have a lot of security measures on our end, like in the background, that we verify a lot of information. And before the check goes out the door, we're always verifying. And sometimes, like, we might question people to say, we need a copy of something, provide us with more information. But it's really, even though it might be kind of a nuisance, it's really an anti-fraud measure tool that we use, not only for the money, but identity theft too. We're always kind of concerned about that. Okay, thank you so much for your attention. Okay, thank you.